Back with Market Sense, and he has made his way into our studios. Distinguished stock market investor Raamdeo Agrawal, who's with us. And I want to start off by talking about that very memorable trip that both of you had, meeting the Oracle of Omaha, and you managed to get that $1 bill signed by Warren Buffett as well. Tell us a little bit about some of your key takeaways as well from that meet while proudly showing off your $1 bill. Which is not worth $1 anymore.
If you could just hold it up for the camera, they could zoom in. Can this camera
zoom in? This is the biggest takeaway.
Yeah.
This is the biggest takeaway for me. Because I have been learning from him for the last 25 years, 23 years now.
Yeah.
And
this is a bill signed by dollar bill signed by Warren Buffett. That's Warren Buffett's handwriting.
Yes. But of course, I was not the person who got it done. It was Tanvi. Thanks, Tanvi. And
so I especially after the interview was like, you know, please, could we have
and
your
he obliged quite willingly?
He was very sweet. Okay. He signed one dollar bill and 2 rupee bills. Very sweet.
Yeah, so that was your biggest takeaway from the Warren Buffett meet, I'm sure.
Yeah, but I think this time what he said about the internet companies, that top 5 companies in the world probably, they're all almost $2.5 trillion, 10% of American market, doesn't use any capital. Times have changed. You know, so the whole concept of capitalism, where you worship capital and you focus on the productivity of capital, since you don't need any capital, where is the, you know, so it's a different world, and India has not landed there. I think we are headed towards that, and at some point of time, I'm sure India will produce its own set of this internet companies. E-commerce companies.
Speaking of India, I was just going through some of the articles, and you've described Narendra Modi as a headmaster for India, but he's taking us places really. So you know, from a macroeconomic standpoint, how are you looking at the kind of progress that we made, the kind of reforms, various sectors such as infrastructure, banks as well, which has seen quite a bit of a thrust?
Yeah, so I think a lot of this leaderlessness which was there. It's like a school where you don't have a headmaster or principal, and then what happens, the whole classroom and everything goes in chaos. So I think it's a very chaotic country even now, and all sorts of problems are there, this NPA. I mean, when the boss is not there, you know, everything goes haywire. So I think some orderliness is coming, and in various aspects of it, whether it's political, social, your economic, everything. I mean, there's so much of work in progress. So I'm quite sure at some point of time, suddenly things start happening, and we are waiting for that day when India takes off. I mean, of course, we are very stable, growing at about 7%, 7.5%. But when will that, you know, great moment come that we get into leapfrog into 9%, 10%, and for a decade or so, we grow at double digit or something like that. So there is all kinds of preparation is on, and I'm not an economist to figure out, you know, so I think still things are slow, and earnings, I'm a stock market guy, so I look at from a stock market point of view. Right now, we still see earnings stuck 4 years back at 400 rupees for a Nifty, still around 400 only, plus minus 10, 15 bucks. So I think that moment is about to come. Everybody is hopeful, and that's how what is happening is before the earnings explode, everybody wants earnings to explode. But I think what is going to happen is first P will explode, and then earnings will follow.
So when that P explosion happens, you think we'll go well past 10,000? Are we preparing? Are we
those
preparing
things
the base?
Yeah, of course. I mean, we are very close to that. It's not very far. So
well past 10,000 almost becomes a base for us then.
Everything will become base. I mean, I have seen this market going 300 times.
True. That's
from
true.
100 Sensex to 31,000 in my lifetime.
Yeah.
So we are going to go to 10,000 Nifty in very shortly, and even 1 lakh Nifty also. Don't ask me time frame. So you know, these are all going to happen. It's just you know, if you took 15% compounding, you do your numbers. I think it will come through.
So you've already become a billionaire in this market rally, Motilal Oswal.
Thanks to the market. The market they had made me first billionaire in 2008 also, for 15 days. This time, it looks this time.
Share some of your pearls of wisdom to help us become like that. I mean, because you've also said that market is a friend of good stocks and an enemy of bad ones.
Yes.
So which are the good stocks that you like?
Yeah, so now this is a difficult question in the sense that, see, what happens is that you end up buying a lot of junk. When I started my career in 87 we started Motilal Oswal. I started buying stocks in 1980. So till about 94, I used to think I'm a very smart guy. And in my 10 crore portfolio, I had 200 stocks, more than 200 stocks. All sorts of junk were there. Some good stocks were also there. Then I took one, after I read Buffett first time, I cleaned up the portfolio and I had only 15 stocks. That very year, my portfolio doubled.
Oh, wow.
You know, so what happens is, another thing is the power of compounding. Power of compounding works over a period of time. I mean, 1 year 25%, second year 56%, third year double. 10 years 10 times, 20 years 100 times, 30 years 1000 times. And it just happens. So you have to allow that lever of time and rate of growth. But we are so impatient in the market that we just pluck the whatever fruits come very quickly in 1 year, 2 years, or just whenever it doubles, people just take the profit and they go out. And that's why you see all the rich people in the world, top 100,000 guys, they all made of one single stock, what they have built. Say like, so today, I mean, in 30 years, 35 years, we have made about what? Personally, between me and my partner, I would have made about 1,200-1,300 crores from our personal savings. But actually, this 17,000-18,000 crores we have built in Motilal Oswal.
That's true.
So that is one single stock because we had no option to sell.
Yeah.
And that's how you, and we had also bad time. In 2003, we incurred loss for a year or two. Typically, if I had a public market portfolio, I would have sold it. But today, what is the value of the same thing? So, holding on for a long period of time, a good company
Is most rewarding.
is most important. Buying good company is very important and holding it for a long time, both are important.
Okay, sir. So first, how does it feel to be a billionaire in this market? Because you really,
As I said, this is a second coming for as a billionaire.
but a more sustainable one.
Looks like it all depends on what you guys do.
And how can investors who are watching you right now, especially given the fact that the domestic investors' profile and strength and dominance in the market has gone up like a multifold over the course of the last 2 years, how can they aspire and make their dreams come true to become billionaires? If not billionaires, millionaires in the market.
You know, actually this market really allows you to be a billionaire. I mean, you have to put your head down. Don't allow the billion to get into your head. Look at your net worth. These are all market cap, not your net worth. So don't mix these two things. I mean, my net worth is only maybe 1,000, 1,200 crores, not even that much. I think just about that much.
So you're so sweet.
Yeah, so it is not billion or anything like that.
Yeah.
So because I cannot touch my billion. It's all for
it's paper money.
Paper money, all paper money. So
real money. What would you say to people who want to make real millions in the market?
Yeah, so real billions in the market is that
millions
first come to the stock market.
Millions is easy.
Millions.
Yeah. First come to the market, you know. I mean, most of the guys I meet, yesterday also I met so many of them in Bangalore and all. I mean, people are scared of the stock market, you know. I mean, they have a lot of savings. One guy met, I mean, he just buys fixed deposits. He's scared of that income tax officer will trouble him for assessment or something like that. I said, no, you buy mutual fund, you buy stuff. Yeah, it's changed completely, but he's in old shape. He's 73, 74. So, I mean, one has to go out and figure out, and you have to take the, I mean, you cannot learn swimming unless you get into the water. You can keep watching YouTube and whatever tube you keep watching. You can't learn swimming. So, you have to get into the water, and there will be somebody to help you out. And there are so many of them right now. And
are HFCs the area where people can really make the big bucks? Because we've seen how the housing finance companies, and you know, it's like just the entire gamut, sir,
and
across the board.
And you've been an advocate of that space, right?
So, investing and investment management, these are two different things. Okay. So, when you start asking about sector and companies and all, then you are getting into the field of investment management. And there, as I say, stock picking is only one of the traits. You know, stock picking is not the end of investing. Stock, you need to select a stock and allocate well. If I give you a good idea and you buy 1% of your portfolio and I buy 20% of my portfolio, the impact after 2 years when stock goes 3 or 4 times. See, why Motilal Oswal is actually enriching me so much? Because my 100% of my net worth is into Motilal Oswal. Outsiders like you or somebody else in your channel who have some few shares, their hardly 0.5% or 1% of their net worth would be in Motilal Oswal. So, stock has gone up equally for him as well as for me. But my 100% is growing at that pace and his only 1%. So, what is important is not only buying the stock, but how well you allocate.
Yeah.
And a large part of the allocation strategy is mutual funds, right? That's where people can, through SIPs, systematically invest and get that diversification to play for returns over a long period of time.
Yeah, so one is asset allocation within your total net worth. So you want to invest, say 100 rupees. Of that, how much of that is in equity and how much is that in debt? That is the first fundamental question.
How much should be? Give us an...
Yeah, so I have 100% in equities. So that's not the right profile for everybody. But let them see their own. The younger people like you and all, you must have 110% in equities. Okay. Right. So I mean, like everything should be in equity to start with, because you have so much of time. Even if you lose out after 5 years or 7 years, you can again. I mean, it doesn't set you back so much. But if you're right in equities, it can take you very far. Yeah. You know, that really sets the lays the foundation for making big money. You start with few lakhs at the age of 25, 27, and in 10 years you are 20, 30 lakhs. Because see, you can make a lot of money in stocks only if you have some amount of capital to start with. 0 multiplied by anything is 0. So you got to have some capital to start with, and it takes a lot of time to build the capital. Like I started in 87 with 0 capital. So the first struggle was how do you build few crores on which you can apply your ideas. You know.
Yeah, and you know, you began in 1987. Look where you are today. You were also, you know, identified a stock like Infosys as the Y2K boom in 1998. Yeah. What's the tech story looking like right now in India?
I don't know. I think we had wonderful time. I mean, Infosys is one of the largest wealth creator and fastest wealth creator. Yeah. I think the stock is up from 93 June. I think, if I'm not wrong. It got listed about 50 crores, and today it is upwards of 2 lakh crores. So it is up some 6,000-7,000 times without including dividend, and there are many thousands of crores to be yet to be distributed, and annual profit is running into 12 to 15,000 crores, still growing. So I think it has been an amazing story, but you know that the hyper growth story of last 20 years, every company goes through that tailwinded environment, and that environment, that phase of rapid growth of Indian tech, particularly for the large companies, I think
it's a mature sector.
Yes, a mature. No, sector is not that mature as much as the
individual companies. Infosys,
Infosys, Wipro, TCS, all these companies, they have become very large. So on that base, to fly at the rate of 50, 100% is tough. But I'm quite sure a lot of e-commerce companies or technology companies or some, I mean, related with digital technology. A lot of new data analytics companies, artificial intelligence companies, those companies are yet to show up in the public market. They are there in the private space. So they can grow from, say, $100 million to $10, $15 billion in next 10 years. So we have to watch out that space. Don't write off the sector. But if you are a steady, you know, dividend earner or not looking for very rapid, I mean, we are looking for 25% kind of return from the portfolio. But if you are looking for 12, 15%, I think these stocks are very good.
But so, you know, so ET now has completed 8 years.
Yes.
We pretty much started, I remember, at the bottom of the global financial crisis. You know, there was a lot of gloom and doom at that time. From there, it's been a long journey. You know, it's been a long journey for you as well. But from these levels, sir, which is a big opportunity that you see? Because right now, the soundbites that we get on a daily basis is about banks. You know, clean up the banking sector, get going with bank consolidation. We just had the Deputy Governor of RBI say, look, we are going to be going ahead with these mergers. We are going to try and go ahead with NPA resolution. Is there an opportunity there? Because the private banks have done well, HFCs have done well, PSU banks are underperforming. You know, it's like, it's a very differentiated trade.
Yeah. So any problem or disruption has a huge opportunity. The company or the business which is disrupted, they go down the tube. The value migrates from those businesses to some other set of companies. So like a services company in US from Boston to Bangalore. So when all these Infosys and all they grew, all the companies in US, services companies, they went down. So in banking till about 95 or till as late as say 2004-05, it was dominated by public sector banks, state-owned banks. Now the value has migrated, a lot of value has migrated from state-owned banks to private sector banks. So the disruption in the banking system, technological or the ownership or entrepreneurship, that has moved to, you know, a lot of value is being created right now. Because economy is growing, it's one of the fastest growing economy. Typically the financial sector grows at 2 or 2.5x to the GDP of the economy. So if Indian economy grows nominally at about 11-12%, the banking system per se will grow at about upwards of 20%. Okay. So that's a huge opportunity. And in that, the largest market share guy gives into smallest market share guy. So you see the opportunity, and it's a decadal opportunity. It's not a 1 or 2 years opportunity. And that also opportunity is not for everybody. You need to execute very well. Within, just because you have a license or your private sector, that doesn't guarantee you that you will go to the heaven. You have to execute well, but it's a tailwinded environment for them. So a lot of very large companies like HDFC Bank, which got born in front of me in 95, 96.
As your top holding as well.
Yeah, so it's a 4.5 lakh crore bank. It's a literally threatening TCS to become number one. And in fact, TCS is growing at just about 8, 10, 12%, whereas HDFC Bank is growing at closer to 20%. So I won't be surprised in next 2-3 years, HDFC Bank emerges by far the largest company of India. It's second largest right now, but in market cap sense, it could be a 10 lakh crore company by 2020 or 22.
You know, the focus on execution, as he said, has been the biggest win for the company. And this space as a whole has done well. You abide by that. So what is the outlook of the consumption sector, according to you?
I think consumption is going to explode. You know, I mean, depends how discretionary is the item.
What do you think about the growth momentum versus the valuation story, sir?
See,
that's the tricky part.
Yeah, so one of the things which we are seeing is that this GST is a very disruptive thing for unorganized. I don't know how exactly, how much it will disrupt and how much lot of spurious and other stuff which were happening will move to, you know, a lot of things will get taxed. So will there be a clear preference for the organized guys? In any case, they sell very good stuff, hygiene and everything. So could there be a 1 or 2 years of good bump in the growth? If they keep doing 8, 9%, 10%, can it go to 14, 15% suddenly because of shift in the market share?
Mr. Agrawal, before we let you go as well, your experience last 8 years, I know Ajay has already done the drill with you outside, but it's been such a great journey and you've been part of it as well with the channel.
So in 8 years you could reach Omaha, you know.
So I mean, the only ones to reach, sir.
No, it takes time, you know, to mature to say that, yes, we'll take the channel to, I mean, it is maturity for us as well as for the channel, that the only Indian channel. You remember those other guys, they were wanting to take interview. I said, no, we are going to do it with Indian channel. Where is that team? You know, I was looking for that.
Actually, a couple of global networks were trying to get Mr. Agrawal to speak to them because...
What a coup you achieved.
So it was a lot of fun. We went through that entire...
that entire area. That was nice at Borsheim's. But Mr. Agrawal, you know, Warren Buffett was not so gung-ho about mutual funds and index funds in India. He was, of course, an advocate that if you want to invest for a salaried professional, go for index funds. That's what he's been saying in the United States. That's what he advocated for India as well. But he's not gung-ho on the entire mutual fund and active fund management story. You are growing your business there because there is ample opportunity that we see, taking advantage of the inefficiencies that there are in the market to outperform. What is your own advice to viewers tuning in, you know, your big fan following out there? What would you advise them to make the most of the markets upfront?
So don't do investing yourself if you really don't know it. It's very complicated. Now the competition is increasingly with the global peers, local professionals. So earlier the competition was retail to retail. So you could make it very easily. And earlier there was a lot of information arbitrage. If you know few company guys, you could get some inside info and make some money. Now it is no more so, in the sense that in fact the insiders, they themselves are scared. There is no insider. Quarter results are there. Every day anybody they are meeting, they have to upload in the system. So there is hardly anything left for the insiders to really encash on. So I think investing has become very competitive. And if you are good, yes, you must do it. But if you are not, you don't have time. You have a lot of money, but you don't have that much time and real, organization to do it. Please, take help, professional help, and buy into PMS or mutual fund from well-managed, companies. And that's the way to go about it.
And watch ET now.
And of course, watch ET now. And they will help you decide few of these managers and sometimes stocks also.
Your asset management company has done very well, Mr. Agrawal. You're very bullish on mutual fund business?
Yes. This is just our start. I mean, for a country with 150 lakh crores GDP, 50 lakh crores of annual savings, your total equity AUM is 5.5 lakh crores. that should be the annual flow into the equities. So we are going to see, and that's happening now. Thankfully, your real estate is somewhat flat or down. Fixed deposits are 5-6%. Gold has gone nowhere. For all the ladies also, they are looking at now buying into mutual funds or something else. So I think the entire attraction for the equity is pretty high right now, and we are seeing the robust inflow.
Okay, then we'll let you go on that note.
Mr. Agrawal, it's great to have you in the studios. Thanks very much for taking out the time to be here.
Thank you.
And hopefully we can hog the next spot as your favorite anchors then.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.